Well, good morning, everyone, or good afternoon. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I am a coach and senior manager with Schwab, and delighted that you are all joining me today. And I have got so much that I want to cover with all of you today, and we've got 45 minutes to do it. Let's get cracking. I've got 4 or 5 new example trades we want to place. We've got a little bit of trade management or trade review to do. I filled in for Brent Moores, who had a well-deserved day off on Wednesday, and I want to reference what we did in that class because if you missed it, you're going to want to go back and watch that. We have got a ton to cover. So I've got the fantastic Mr. James Boyd with us in the chat, along with a whole host of the usual suspects. So I want to thank you guys for continuing to link arms with me every Monday and Friday as we are figuring this stuff out together. So hello to Paul and Jackson and Jenny and TM and Randall and Josh and Frank and Coach Coco and Jay and Abundant and the rest of the gang. Thank you all for being here. Thanks also to James, who brings both his expertise and his humor. He's a friend and fellow coach. We're delighted he's here. If you are not following us both on X and LinkedIn, what is going on? It's free. There's tons of great stuff being posted. You are missing out, my friends. At Barb Armstrong CS and at James Boyd CS. I found out yesterday I had not one or two or three, but seven imposters. So know that there's only one Barb, one Connie, one James, and none of us will ever reach out to you and offer you a great crypto deal. We won't offer to trade the account on your behalf if you share your sign-in information with us. Never ever do that, guys. We won't offer you private education for a fee. None of that. So just beware, okay, that there's, only one real person. I have to do something here. Give me one sec. I rebooted my system just before we started because some things were looking wonky, and we don't have time for technical issues today, right? Touch wood. Okay. So let's go through we're going to place a couple of example stock trades today, and we're also going to do a couple of example option trades. So just know that options carry a high level of risk and aren't suitable for all investors. Also know that we're using the Paper Money software application on the Thinkorswim desktop platform. And there are some nuances and differences. The most significant one for our class is that short options will never be assigned early. And that can happen in a live account. And have I seen it happen? I have. Also know that stop losses, don't guarantee that we're going to get out at a particular time. So I tend not to do much of a market overview in my classes now because James Boyd and Kevin Horner had over 500 people doing a fantastic joining them for a fantastic market overview at the market open this morning. They do that 4 days a week. Kevin Horner is there. So check that out. Fridays aren't archived. So if you're not catching that class, they talk ETFs. You're going to want to catch that. We're going to play some new example trades. We're going to do a little trade management. And we're going to talk also just briefly about how to be organized, treat your trading like a business. Because managing an options portfolio, it's how do you manage it? Well, let's get organized to begin with. Now, if you've never been to a live event, there's an advanced options 2-day event coming up at the end of August. I won't be there, but I believe Kevin Horner is going to attend that one. And Ben Watson will be at all of these, but I'll be at the one in Scottsdale in September, the Market Drive, and then the 2-day event in DC in October. If you come to these, please come up and introduce yourself. Would, love the opportunity to meet you. Okay. And it's how I got him, into this whole world of investing and trading, was by attending a live event. So I think of them fondly. So we had a new all-time high in the market yesterday on the S&P 500. Today we're, at this point pulling back just a smidge, but at 7,800, hard to characterize that kind of trend as anything other than bullish. We're hitting a new all-time high on the small caps today. Yeah. Yeah, somebody said in the chat, if one of your imposters offered single malt scotches and cigars, I'd bite. Okay, well, full disclosure, I met up with scotch in a fort when I was 16 and it gave me the flu. So I will never offer you a single malt scotch. It's not my beverage. I haven't liked it to this day. At the Dow, within a stone's throw of an all-time high, setting up a bit of a bull flag here. And then how about our tech heavy index, our NASDAQ? And I've drawn two lines here. Some people might have drawn a line here and said, we had a diagonal resistance breakout. Some might have drawn it across from the top here, which is how I originally drew the line. And either way, we're getting a diagonal resistance breakout, after a period of consolidation. And I mean, you don't even have to have a super strong arm to be able to hit the all-time high on this index from where it's currently trading, right? Right. So somebody's asking about the live event schedule. James will post it in the chat, but if you go to schwab.com/coaching and then go to in-person events, you'll find it there. And then when we look at our VIX, I mean, it's in the basement. Like the 1 year, well, 9 month, I'm sure it's also the 1 year low on this is 13.3. We're down close to that now at 14.5. Yeah, so there we go. So things are bullish. So if you're wondering why we're doing bullish trades, it's because the market is bullish, and so we're looking for, opportunities that are bullish. And if you're wondering why, well, this is it. Now, on Wednesday, we talked about how do we set ourselves up for success. And last week, when I was off, I read a couple of books by Anthony Bourdain. Well, I read a couple of books by a chef. And he was talking about how he likes to have his station set up. And I'm not suggesting that you read any books but one of the things when I talked to my brother on the weekend, and he's a foodie too, he'd also read these books and was just talking about how the chefs set up their station. And if you mess with their station, man, they will break your arm. Like, because when you're really busy and you want to move quickly, you want to know where things are. And I also thought about my closet when I opened it the other day, because at one point my closet got a little out of hand, my front hall closet, and I just one day couldn't stand it anymore. And so I took everything out and reorganized. And so all the scarves in one spot, all the hand warmers, like I live in a climate that has winter, all the sun hats, all the, so now I can just easily go in and grab what I need. And it feels good every time I do that. And so I was looking at my online closet, called the monitor tab. And I thought, do I really have it organized, the best way it can be organized? And so if you want to hear like the full 45-minute class on that, I put a link in the chat. I'll put a link in at the end of this webcast if you're watching it in the archives. And it was just kind of how to be organized. And one of the things I realized is that the trade we are currently doing most frequently, given that the market is bullish, are they bearish trades? No. So I put the bearish trades at the bottom of the closet, the long put verticals, the short call verticals, and long puts. And currently we don't have any of those. And the trades that we are doing with the most frequency, given that this is a smaller account class, is long call verticals. We currently have 6 of those, short put verticals, long calls, stocks with targets, and buy right covered calls. And the one that we tend to do the most of right now is these two, the long call verticals and short put verticals. So we've got these, I move these up to the top of the closet. And if you want to see how to move things, you can go watch it, or in the trade management mini sessions, there's a thing on how to organize your monitor tab. And I go through all of that. It's like a 10-minute video. The other thing that we did is we said, hey, if we're doing some maintenance, and I changed the names on these this morning to start with my. So I created a list called my long call verticals. And then when we place a long call vertical trade, we can just put it on this watch list. Now, why would we bother doing that? So that if we want to come to the charts and review these trades, we can very quickly go from one to the other. Okay. And by the way, we had a trade on JP Morgan that hit our target and we got out of it. So we placed two new trades in that Wednesday class on JP Morgan. And we also placed a long call vertical trade on Netscape. And so if you missed that class on Wednesday and you want to be able to follow along, if we come to our monitor tab, that Netscape, it's up 8%. It's pulled back today. And then the ones on JP Morgan aren't up a whole lot either. Now, for trade management, one of the things that we did, and you may say, well, why did you call it my? Well, so that when I come to my personal watch list, they're all linked together. My long call verticals, my long calls, my short put verticals. So that we can it's just kind of setting your station up so that you're ready to roll and can review things quickly if what you really want to do is be out walking your dog or on the golf course, or maybe you have a job that requires some attention. Yeah, so the JP Morgan, the one that hit the target, if we come, somebody asked, and I did review that. Well, actually, I was going to review it again anyway. So here we placed a trade on July 24th. We did a short put vertical at 290, and then we got out at 435. And so if you look at that and you say, oh, okay, well, okay, let me just move this over. Let's hope this is working. Ah, beauty. So if we take 435 minus 290, it's $1.45. And that kind of makes sense, right? And so what was our return on our risk? Because we were risking $290 was $1.45 per share, or $145. And that's a 50% return on our risk. And what do we call that? We call that a base hit, my friends. And and our goal in this class was to make $100 a week over the course of the year, which some might consider to be an aggressive goal. Like that's a 20% return over the course of a year, 5,000. On a 20, we started with 25,000. And we hit that goal fairly quickly. So we said, okay, we're going to up the goal and we're going to make it 200 a week. And so we're on our way. But because you may say, well, $145, that's not all that in a bag of chips. Well, it beats a poke in the eye with a sharp stick. And that's kind of our goal almost for the week is 200. If we could do two of those, we'd be ahead of the game. In this one, we were in from July 24th, August 11th. And then on Wednesday, we put in, we're just going to ignore this because somehow we got an extra thing in here, but we placed two new trades, one expiring on the 18th of September and one expiring on the 11th. And we changed our strikes. So we're going to compare and contrast these. So if you wanted to follow along with us and put those on, you're putting them on a couple of days later. But yeah, so those two new trades we put in on Wednesday, we will follow up on in this class. Okay, we had one other trade that hit a target, and that was Capital One Financial. So we'll just have a quick peek at that, and then we're going to move on to new trades. So Capital One Financial, we had this double bottom or cup and handle pattern set up. We had a breakout, came back to retest. We had this bullish Harami pattern on the chart on Monday. And so we just did a swing trade. And we said, okay, we're going to buy a call. And if and or when it gets up to 224, we're out. And you might say, well, that was a really bad decision because we could have made more if we had stayed in longer. Like, hey, don't be greedy. So we said to ourselves, if we can make an okay return in a few days, because swing targets, not always, but when it's set up like this, we're only intending to be in. The expectation is we're only going to be in it for a few days. So if we come over and we look at Capital One Financial and we say, okay, well, we had done a long call vertical a little earlier in the month, and that worked out nicely. And then we said, okay, we bought this for 375. So how much could we have lost? We could have lost 375, although at we put in an exit at a 50% loss. And so how much did we make on that? A buck 50 or $150. And so again, what was our return on risk? That was 150 bucks is what our return was. We were risking 375. And so that was a 40% return. Now, I dare you, go to a barbecue this weekend and say, you know what? This person misguided me because we placed a trade on Monday. We were out Wednesday. We had out Thursday. We were out with a 40% return. But if we'd stayed in one more day, we would have made even more. They're going to throw a rib at you. Like it's like this worked. So we're going to just be happy and call that a base hit. So there we are. Okay, so we're happy campers on that. Now, could we place another trade on this? Could we say, well, this is breaking out now, and you might say, well, if we're looking at this as a potential bull flag setup, we've now had 5 up days. Maybe we wait and look at this Monday and look for, maybe a day or two for it to pull back. Yeah, I'm assuming you're having ribs if they're throwing a rib at you, just FYI. Okay. Okay. So, maybe we wait on that and we look at some other opportunities. Okay. So you may be saying, like, what other opportunities? Well, I'm glad you asked. So we're going to look at STX. So here's one, and you might say, like, is she new? I know Seagate Technology, it's up a modest 248% year to date, but it kind of like hit the struggle bus, like, for a hot minute, right? Like it hit this high in June and then, until August. So it was a couple of months, it was kind of pulling back. And then we had this diagonal resistance breakout. We all know James Boyd, he has a bit of a crush on diagonal resistance breakouts. So it kind of broke out depending on how you draw your line, a couple of days ago, and it's continuing to move to the upside. And you might say, well, it could come back and retest, and you're right, it could. It might never get back up to 1145. This is also true. But after we hit earnings, this thing has seemed to do kind of not too badly. And maybe we can come down and have a look and say, well, what are the analysts saying? Well, Argus raised their price target to 900. Well, it's already at 950. So hello. Barclays to 1250, JP Morgan to 1240. I find it just interesting, how varied it is. 1187. I don't know how they picked that as opposed to 1186 but to 1,000. So, analysts seem to be bullish on this thing. So could we just say, hey, could we put in a swing target and do it with stock? And so we're going to give this a shot. You might say, again, like Barb, like let's make this 1140. And here's our stock target. We're going to do this with stock. And why with stock? Well, we could do it with an option, but we can't afford an option. An option, oh, sorry, we're going to make this 1140. An option isn't really an option for us. Why is that? Because if a stock is over $1,000, we probably can't afford to buy a call, at least not a call way out there. Like the September calls are $86, $82. If you're looking at the first strike out of the money, like we can't risk more than 500, say 550, but we could invest 5,000. And if we're investing 5,000 and we don't put a stop in place, then we could lose, all 5,000, like, because technically it's theoretically possible for this stock to go to zero. But if we buy 5 shares, we put in a target at 1140, And then we say, well, if it came back here, our expectation is that it's going to bounce, because if we weren't expecting that, then we wouldn't place the trade, right? So if we say around 860 and we go 2% below that times 0.98, we'd put our stop at 842.80. So how much are we risking? About $100 a share. So we're risking, say, 500 to 550 if we bought 5 shares. Now, does a stop guarantee that we're going to get out at exactly that price? No. So we could do a debit spread. Somebody's saying, could we do a debit spread? And we could. And we could do a debit spread and compare them. So, but if we come to the trade tab and we're going to start with this stock with an OCO bracket, we're not doing 100 shares because that would be a $95,000 position. We don't have that much money in our account. We have 26,000 available. So we're going to make this 5 shares and we are going to put our target at 1140. You might say, like, with 5 shares, is it even worth it? Well, 950, 1050, 1150, if you make almost $200 a share, say not quite 200, what's 1140 minus 959? $180 a share times 5 shares. That's not a base hit, my friends. For us, like, we're batting runs in with that. It may not be a grand slam, but it's grand slam-ish. Like, that's a month's worth of our target in one trade. Do you hear what I'm saying? There was a coach who used to say, "Are you picking up what I'm putting down?" Yeah. And now, as much as our eyes may be blinded with, we may be salivating, thinking about all the ribs we could buy and host a barbecue for our friends with, almost $1,000 or $900. Well, we could also lose, but we don't want to lose that much. So how much are we risking here? $115 a share times 5. So we're risking 575. And given we're up a fair bit in this example trading account, and keep in mind, sometimes you get paper money fills and all that kind of stuff. But, if you don't want to risk that much, then you could say, well, if we do 4, then you'd be risking, less than 500, and you could do that. So if we're saying, okay, we're going to honor our rules, whoops, we're going to go to 4. And now if we're risking 115 times 4, we're risking about 460. And then that gives us a more wiggle room that if the stock were to gap down, then we're, not laying on the bed, sucking our thumb in the fetal position because we took such a big hit. Okay. So, and again, if it gaps up, we could make more per share. Okay. Okay. Yeah, last summer when I did the Barb 2.0 project, there was one where we did a buy right covered call on something, and then I was gone for 5 or 6 weeks, and that stock, the covered call expired worthless, and then that stock went crazy, and we made about $1,500 in paper money, which was kind of lovely. It was kind of benign neglect, and it worked out. Okay, so let's come and look at Cintas. Now, like here, somebody said, well, what if we did a long call vertical at say 950 and 960? And you might say, well, here we've got like a $5 wide spread. That's crazy, but it's an $87 option. So that's less than 10%. So if we say, did we just get, what? I must have put the wrong price in there. Oh, it was 1140. So what happens when you put something in is that the original price, so we made a few pennies on this. I need to do this again. I didn't put in the right target when we changed the quantity. So we're going to go back and do that again. So this was STX, right click, buy custom with OCO bracket. So what happens is this automatically puts in a target $1 higher and $1 lower. And so when I changed the quantity, or either that or I forgot to put it in, change it at all. So we want this to be 1140. And we want this to be 842.80. 842.80. Make these good till canceled. Confirm and send. That's the problem with being a human being. Sometimes we make mistakes, right? This is why it's important. And you know, dork move here is that I often read these out loud and I'll say, okay, my target is 1140. It's trading at 950. Does that make sense? My stop is at 840. It's trading at 950. Does that make sense? Okay, so we're going to try this one again. Stocks with targets. And this is a swing target. Okay. Oh, and then we looked at, you know, if this is $6 wide, you know, we have 141 contracts and 71 contracts. Is that enough? Well, we want 20 times the number of contracts. This is almost $1,000 stock and it's already traded over 1 million shares today. And you know, our example trading plan, we want it to trade more than 1 million. We want 20 times the number of contracts. We want the bid-ask spread to be less than 10%. So if we wanted to compare and contrast, so this is at 495. This only has to go up by 45 cents and stay there for us to have a profitable trade. So if we said, okay, we're going to compare these two. I'm going to make this first trigger sequence. Our goal is to make a 50% return or to get out if we're down 50%. So we're going to make this let's call it 760. Because 750 would be 50% on 5. Confirm and send. We're going to put this in our long call vertical group. And then we are going to say that we are going to compare to the stock swing trade. Okay. And then since we're being disciplined, we're going to come up here and we're going to add STX to our list. So, and I have this list sort alphabetically. So you'll notice that it then comes up here. And then if you want to put your trade on the chart, I just draw a line. I'm not too particular, as Ben Watson likes to say, not too particular, not too precise. I'm going to make this because then I can come in and just adjust it. Long call vertical, 950, 960, September 18th. And we're going to show that on the right. So now when we're doing our daily routine and we click through, we can just so easily see when we place the trade, where our strikes are, all that stuff. And we place these trades today. And so put a little circle here. Okay. Now, the bigger concern with this one is that if it pulls back and bounces, you know, our rule says we get out if we're down 50%. Yeah. Okay. So let's move on. RTX. So we're hanging with the X brigade today. So if you're not familiar with this company, if you come to the Analyze tab, it's in the industrial space, aerospace and defense. Looks like, you know, we got a little bit of a love fest happening with at least these analysts. You can click on this and, you know, if you want to learn more. we recently had earnings. It gapped up on earnings, creating this inverted head and shoulders pattern. And then it's kind of kept on going. And when we look at, today, we've got this Harami pattern. Now, some might say, well, you say Harami. I say Harami because that's a complete pattern and it's considered to be a tradable pattern from a technical analysis perspective. Others might say, well, I see a hammer or a doji, and for that you require confirmation. But let's say we're overall bullish on this stock, and we've seen that this uptrend seems to be continuing. We might want to come over here and just see, what are the analysts saying? And we may have to scroll down because, we did have earnings a couple of weeks ago, but 232 is Berenstein's target on this. Argus raised their price target from 230 to 245. Like that's almost off the chart. So if we're saying, well, at least a quick scan says these analysts seem to be bullish, chart looks bullish, market is bullish. So if we say, well, let's look and see, could we do, a 220, 225? Well, if we come out to September, we've got thousands of contracts. We've got a 35-cent bid-ask spread, so that's acceptable. Trades over 1 million shares a day, so check, check, check. But we've got a $10 wide spread. So we can't do 221, 225. We'd have to do 220, 230. And that would be hitting at least a new 1-year high for this stock. But when we look at this and we say, well, to get our max gain, it would have to go above 230 and stay there. But we're only looking for a 50% return. And when it's at 438, we just need this thing to get to 650. And you might say, why would you want to get out that soon? Because if I come to confirm and send, we could make $565 on this. Why are we going to get out only making, 200 and a bit? Well, because that's a 50% return, and so you might say, okay, well, we could do that. Or, is there enough volume on the weeklies? And so we could do a 220, 225, again, million shares a day. We've got more than 20 contracts. We could only do probably, if we did 2, that would be our limit. We've got a 25-cent bid-ask spread here, so that's acceptable. So that's at 245. Again, that's less than 50%. So you know what? Let's do this and then compare them. Compare the weekly to the monthly. And so we'll do 2 contracts here. So we're risking 500. We're going to put our target at, well, 248. It's close to 375 times 1.5, 372. Opposite order, 372. And if you were doing this in a live account, would you go in and be placing things at, different expirations at the same time and maybe different strike widths? Well, not necessarily, but we're doing this because we're learning. So we're going to compare to the monthly and the $10 wide strike. So we'll do one of each and just see how it plays out. Yeah. Yeah, like somebody said, like, when it's for something on a $10 wide spread, the thing that I like about that, if you believe that your trend is bullish, that the technical analysis is strong, is that, you may not have to wait for it to even go through both strikes. Like it may increase that much in value, or it might go through both strikes just briefly, but that's enough to get you to the price target you want. Because remember, we're not being greedy, right? Like when I was a kid, there was this expression, don't be a greedy guts, you know, and maybe it's not the nicest expression. I don't even remember, in what context it was said, but So we're going to put our target in here at 657, and then we're going to compare it to the other strike, and we'll just see how these play out. We're going to compare to the weekly expiration, $5 wide strike. And these are just notes that we're putting in for ourselves, to ourselves. And you might say, like, well, I see you put these notes in, but I never see you go back and refer to them. It's because I do that before the class, right? Like I'll come up here and say, okay, first of all, we're going to add our RTX to our long call vertical group. But I'll come up to the monitor tab and see under working orders. And I always organize my working orders by symbol so that I can quickly go find the stock or the trade that I want. And then I can just click on this and go, oh, okay, well, we're going to compare that to a weekly, or, here on STX. Oh, right, this is a swing target. Or if you look at JP Morgan, we did 2 trades. So I bet you this one is saying compare. Yeah, compare to, a different expiration with different strikes. So now, it's just you're looking at your logic. Okay. So we've got like less than 10 minutes left. Would you like to see another example trade? We've done 4. I mean, I don't want us to do too many if you're not interested. But here's another diagonal resistance breakout. So we're moving over to the C part of the alphabet now. But now, this was more bullish when I first looked at it. Now we've got this, I still think of it as an inverted hammer. I think we call that a shooting star if it's at a potential, here it's at a previous high. It could be pulling back, so maybe we wander over to Cintas instead. So, and here's an interesting one on Cintas. So this is a company that makes uniforms. And, it was kind of basing here. So we had like a double bottom or a cup and handle. It broke out really dramatically on earnings. And now it looks like it's setting up a new base. And when I came and I looked at, well, how do the analysts feel about this? Well, a price target of 230 is up here. And that's both UBS and Argus raised it to 230. Now you always have like the redheaded stepchild. Like what's with Rothschild? So they're at 198. RBC is at 206. UBS went up to 230. So, if you just look at like overall, Wells Fargo to 250, Baird to 214. So if we did a stock thing, and why might we do a stock thing? Well, when I looked at the options, and maybe they've changed, but I mean, look at this. On the weeklies, 660 to 1210, you could drive a truck through that. Like, so hello, that's not happening. Then we come here, and even though we have hundreds of contracts, we've only got a volume of 340, but like that's really low on the day. Like typically it's over 1 million. And we've got hundreds of contracts, but 640 and 720, 80 cents, that's a bit high. 850 to 1020, the bid-ask spreads are just too high. And 360 to 420, that's 80 cents. Like that's 20% on a $4 option. So options are really not an option. Okay. So AGS, I really like the way you're thinking. So AGS is saying like, hey, could this be setting up a head and shoulders, which is bearish? And it could, like the analysts might argue with you, but could you put in a target of 210? So that would kind of, because I thought the same thing, and if you're not familiar with this pattern, well, then you should be coming to Getting Started with Technical Analysis on Tuesdays. But, we've drawn a lot more of these kinds of patterns lately. like inverted head and shoulders kind of patterns than these, where you're kind of going like, oh no, this could be bad. And so some might say, is this it? And I didn't actually notice this part so much. So, but maybe we put in a conditional order and say, hey, if this bounces, it might come back up around this 210-ish level. But we only want to enter if it goes above. And so we'd put in a conditional order and say, it has to go $1 above today's high, which is 201.02. So if it goes to 202.02, then let's get in. So we could make that conditional. 202.02 would get us in, and then we might want to get out when it comes back up around to here, this 210-ish level. And we don't, like I said, have a lot of time. So maybe we save this trade by for Monday. And Noodle Brains is saying, would you wait to see if it bounces off the support? And so one of the ways to place a trade now while we're waiting for it to bounce is to put in a conditional order. And so that's another one we could look at. And so, keep our eyes on that one. And we meet again on Monday at the same time. So we don't, have to do everything today. Now, here's one that I thought looked interesting because we've got this big cup and handle, broke out, came back. And then today, the only thing that's a little worrisome about this is that it opened higher and is tracking lower. That's why this candle is dark green, because I use candle trend. But so if it were to close now, it's not closing. We don't have a hold, a close above the high of the low day. It's still above yesterday's close. But if we're waiting for a hold, we're going to just wait on that. So there's another one that we're going to wait on. Okay. Why? Because we have rules for a reason, and they're there to protect us, and they're there because we treat our trading like a business, right, folks? Right. Just repeat. Nod your head. So if you haven't subscribed to the channel, there's like 208,000 people who've subscribed. It's free. So like, do not delay. Hit that button in the bottom right corner. And when you come to this trade management mini sessions, if you're saying like, what is she talking about? This, Cahold pattern on a hammer or on an inverted hammer, you can watch these little videos. Like there's 13 or 14 of them on candlestick patterns, and they're all like 5 minutes or less. And then if you're wondering, where these example trading plans are that I refer to all the time, here's one for long call verticals. Here's a stock and, a stock plan. We did a long call this week, so there's one for long calls. I've got to do one I did long calls with a 1 ATR target. I need to do one for swing trades as well. So stay tuned for that. Maybe we'll get to that one next week. So guys, hit the like button. Make sure you're following James and I in the land of X. I didn't see a survey in the chat today. Just let me scroll up just in case. Because the last time we had one in this class, like I missed seeing it, and so did the chat person, and then we didn't repost it, and so almost no one responded. Yeah, so we've got no survey today, so you're off the hook for that. But hit the like button. It helps move this up in the algorithm so more people can find this content. Up next, we've got advanced options, so you'll want to stay tuned for that. And please, make sure you join me Monday, where we'll continue our discussion on trading a smaller account. Thanks for joining me today, everyone. Thanks to James for his help in the chat and the guys behind the scenes. Have a great weekend. Get out there and hug someone you love. And I'll look forward to seeing you Monday. Bye for now.